Greetings, colleagues. Good afternoon, good morning, and thank you for joining us today. This is the last week in the online course on access to this, on facilitating access to decent work for refugees and other forcibly displaced persons. And as you know, this week is going to be a little bit busier than usual because we're going to have 3 sessions rather than 2. But it's also going to be a bit of a different week in the sense that this is the week where we sort of flip the attention back or flip the spotlight back towards you, towards our participants to hear more from you, starting from tomorrow for the spotlight session and then Thursday with the presentation of the group work. So I will have a few announcements about the spotlight session and the group work towards the end of the session. So please try and make sure that you stay connected so that we can address any potential questions that you may have. But before we do that, let me introduce the topic of the session today. As you will have seen on the course agenda, we are going to be discussing access to finance and financial inclusion for refugees and other forcibly displaced persons. And I'm very happy to be able to do that in the company of 2 colleagues, Micol Pistelli from UNHCR and Yousra from ILO. So once again, you see that the speakers, the experts that we invite to this session represent both of the organizations that have contributed to making sure that this course could be developed and could happen, could take place. Both Micol and Yousra have been with us in the previous editions of the course, but let me take maybe a couple of minutes to introduce them to you. Micol Pistelli is a Senior Financial Inclusion Officer at UNHCR, and she serves as the focal point for promoting initiatives that enable forcibly displaced persons to access and benefit from formal financial services. She has a long experience in this field, including as a lecturer with university and working with the Italian Ministry of Foreign Affairs and with microfinance institutions in both Egypt and Paraguay. Yousra Ahmed is a technical specialist on financial inclusion within the social finance program at the ILO, based in Geneva, where she spearheads the ILO's global program on financial education and drives initiatives to enhance financial inclusion for vulnerable populations, including migrant workers, refugees, and those in fragile settings. And her role extends to advising and collaborating with the banking sector across different continents, including Africa, Asia, and the MENA region, towards the creation of products and services that can match the needs of these vulnerable populations. So first of all, thank you very much, both Micol and Yousra, for being with us today. I think the topic that we're going to explore, that we're going to discuss today, is particularly relevant in the, as we say, in realizing access to decent work for refugees and for other forcibly displaced populations. So thank you very much for accepting our invitation to speak. The session today is going to take the format of an interview, and I know that the participants, our participants, are already used to this type of approach. So feel free to make the most of the opportunity to interact with our experts. Please feel free to use the chat box or the raise hand function at the bottom of your screen if you would like to share any comments or any questions, any experiences that you may have in this field, or if you would like to ask for clarifications. We're going to stop at different points throughout the session to make sure that we can also hear from the audience as well. I have prepared a few questions to get the conversation going, so unless we have any initial questions right off the bat, I'm going to start with my first question, my first round of questions. So I have one question for Yousra and one question for Micol. And Yousra, I'm going to start with you as the ILO representative. My first opening question is about how the ILO conceptualizes financial inclusion. So what is the definition? What is the how would you explain the concept of financial inclusion within the broader framework of ensuring access to decent work for refugees and for forcibly displaced persons? So if you can help us a bit by setting the scene in this sense. Thank you very much for being here once again, and over to you, Yousra.
Thank you, Miki, and welcome, colleagues. I'm happy to see many of you, despite I'm sure many of you, like us, have had a long weekend and some holidays. So happy you are here. So to answer your question, Miki, but also to link it as well from where I'm coming and the unit and the program in which I'm working. It's called the Social Finance Program, and it is the focal point within the ILO for any work with the financial sector. So we work really at different levels, and we work with the banking sector, with banks, financial institutions, financial cooperatives, but we also work with the insurance sector and the risk management sector. So within insurance, reinsurers, and as well as we work on the investment side with investors, fund managers, and a lot of the work around ESG and green finance. So the work for access to finance for refugees is on the first pillar of our work, is located there. And it is also, so sometimes people ask, how does it come? Why does the ILO is working on financial inclusion? What is the link between the mandate of the ILO and financial inclusion? Not only in refugees, but also and mostly in refugees setting and in fragile settings. So actually we see really access to finance and financial inclusion as an enabler to decent work. It is really a means to an end. We work with financial service providers, with the financial sector, to include financially populations, not for just the fact of including them, but really with this lens, with this idea, with this very conscious work and activities into including them and providing them with decent work. So to achieve this social objective within the ILO, what we try to identify and what we do with the partners that are financial service providers with whom we work is that we try to identify the ones that want to do something different, because in order to achieve decent work, they would need to do something different. It is not business as usual, off-the-shelf financial products, and there you go. You take a loan, you reimburse it, and as in the old times, you just think and assume that the impact was positive. So we really need to work and to partner with institutions specifically that want to provide financial services that can be loans, credit, that can be savings, that can be payment services, that can be insurance products, to include them, of course, in the financial sector with that aim of providing decent work and with accelerating decent work. I don't know whether perhaps we'll have another opportunity to talk specifically about the intervention model of the ILO, but through the work we do, both with the population that is in demand of financial services, as well as with the financial service providers that provide those services to them, it is whatever comes out of that is aims at economic integration. If you look at the FDPs and at the forcibly displaced population, economic integration through financial inclusion is of utmost importance. It is really something that is at the heart of what we do, because through, say, business loans, you can create, sustain, and grow your enterprise, meaning that you are sustaining or creating jobs for yourself, but also potentially, if you are growing, you are also employing and creating employment opportunities for others. Another objective as well and outcome is the economic self-reliance that is also linked to the concept of decent work, because it reduces the dependency on aid and on grants, and it creates opportunities as well for employment. The right-based approach is also at the heart of the work of the ILO in general, but also in financial inclusion as well, and in particular for this particular population, where the non-discrimination according on your status, on your nationality is something really that we are advocating for. And this happens through addressing regulatory barriers and institutional barriers that refugees face when they move from their own country to another country. Formalization as well is something that can be, of course, at a certain level of financial inclusion, let's say, can be an enabler as well. So financial inclusion can be an enabler for formalization and for moving informal enterprises and informal micro enterprises to the formal economy, making them so more under the umbrella somehow of the decent work, making them also perhaps benefit from opportunities that are available at the public sector, from tax reduction, from opportunities of accessing markets, and so on and so forth. Also, financial inclusion is seen as a complementary of social protection. And in these very particular settings of extreme fragility and of displacement, where not cash grants, but grants and support, financial support is dwindling, and unfortunately, social protection and inclusion in the national social protection schemes is also what the ILO would like to do and what is striving to do, but unfortunately, it's not that easy. So financial inclusion can, and with its all aspects of risk management tools, can come as a complement to social protection and would help this population receive, store, and use the funds that they have securely, but also have strategies to manage risk at short and at a longer time. So yeah, if we kind of look at the financial inclusion through a decent work lens, employment creation, so definitely financial inclusion is a driver for employment creation, mostly through entrepreneurship promotion. Social protection through saving, insurance, payment services, but also sometimes financial education for better tweaking of financial services for risk management. I mentioned as well the right to work, that is one of the core elements, the third element of the decent work agenda of the ILO. And the right to work as well is something that the ILO is very, very doing very extensively in the displacement setting, and that is promoted and complemented as well by access to finance. And finally, the last point and the last pillar of the decent work agenda of the ILO is the social dialogue that can also be enabled through financial institutions that have representation membership through, for example, the financial cooperatives, as well as through more informal setups such as the village savings groups that also have this representation and one member, one vote. So yeah, I hope I answered your question, but I'll be more than happy to answer either additional question from you or from the audience.
Thank you, Yousra. I think this was an excellent overview, and I think it was particularly relevant in the way that you were able to connect the topic of the session today with many of the other topics that we've addressed throughout the course, and really making the linkages with, as you mentioned, the idea of job creation, of improving self-reliance, of financial access to financial inclusion as an enabler for potentially for the transition to formality, for complementing gaps in social protection coverage, and mentioning as well probably one of the last points that you raised about representation and facilitating social dialogue. And it's true, as I think you mentioned at the beginning, that it's very much rooted in the right space approach that the ILO is putting forward when it comes to access to decent work for different target groups and different populations. So thank you for this overview. Let me then pass the floor or loop in also Micol to tell us a little bit more about financial inclusion from the perspective of UNHCR. So how can financial inclusion support protection and longer-term solutions for refugees and other forcibly displaced persons in the work that UNHCR is doing in this sector? Thank you, Micol, and over to you.
Thank you, Miki, and hello everyone. Thanks for the invite. So from a UNHCR perspective, as we are a humanitarian agency, we see financial inclusion both as a protection tool and as well as a tool for sustainable solutions. So for us, we see access to financial services, so from opening basic deposit accounts to access to credit for enterprises, as Yousra was mentioning as an important tool for self-reliance and development, to access to payments and remittances, up to access to insurance. All these are very important tools at really at every stage of displacement. And financial inclusion is seen within a broader lens of the socioeconomic inclusion of the displaced people. The Global Compact of Refugees, I don't know if you're familiar with that, it is an international framework adopted by the UN General Assembly in 2018 in order to improve the global response to the refugees crisis. Is really talking about the importance of a paradigm shift from aid focused on emergency, so emergency focused type of aid, to share the responsibility among countries and the long-term solutions. Financial inclusion should really be seen as part of this framework, where access to formal financial services goes hand in hand with every effort to include the refugees in the social welfare in a given country and access to foundational rights. So the right to movement, the right to access the labor market, jobs, access to markets. You really can't have a meaningful access to financial services without having these foundational rights. If you don't have funds to put into a deposit account, it's not much meaning to have a dormant account sitting there. At the same time, if you have access to wage employment, you do need, in most of the countries, access to a safe place to deposit your funds. If you want to be an entrepreneur, cash assistance is way not enough even to get started. So it's very important to have access to capital to invest. All this is about financial inclusion. And we really see that in every phase of displacement, so from early arrival to more protracted and stable displacement, there is a role to play for financial services. So at the very beginning, even the first few months, we talk about financial services more as cash assistance. But how does cash assistance happen? We strive at UNHCR to have cash delivered through financial service providers, possibly through digital means, in a way that can also open access to additional financial services in the name of the refugees. And this is usually the first gateway for a displaced person to have access to the formal financial services. Let's think about remittances. They are a lifeline for many refugees at the arrival phase, and this is about access to financial services. Then the more protracted the displacement begin, the more sophisticated become the demand for financial services. Usually you see the need for access to credit for consumption, for business, the importance to have access to insurance, health insurance, but also becoming increasingly important agricultural insurance, climate insurance, access to pension schemes. So it's really throughout all the displacement phase, we see it as a key element. And then I would also like to stress the importance of really the core work of the team that Yousra is leading on the financial education, we are really stressing how important it is, not just to give access to financial services, of course, ensure that there is usage of such services and products that are tailored to the people's needs, but also ensure that the displaced population, especially refugees and asylum seekers in a new country, are aware of what are their rights to access these services, because often there are issues not only when it comes to the supply or the regulatory environment, but also about the demand. Often we found that refugees are simply not aware of what are their rights, or maybe they are aware, but perhaps they had a bad experience because they were, their demand to open an account was turned down by a bank, or access to loans was turned down by a microfinance institution, that they might not be aware that often the regulatory environment gives space for refugees in probably in half of the countries, more or less, to have the opportunity to open some basic accounts. So they should be really also informed of what are their legal rights, and of course then what are their obligations when they're in those countries, when they're recipients of such rights. So we really try to embed financial education, and very much through the partnership with the ILO, into our programs. We really think that is a very important enabler to financial inclusion, as much as it is the support that we provide through business training, to supporting services, through cash assistance whenever possible to start a business, and so on.
Thank you, Micol. And I think it was really interesting to hear in your words how the promotion of financial inclusion really ties in with the protection mandate of UNHCR. So thank you for highlighting that. And what I found particularly interesting, well, obviously this idea of the partnership with ILO, working on the capacity building on the education aspect, let's say, maybe, of the promotion of financial inclusion, but also found particularly interesting, and this is probably something that we're going to come back to in the course of the discussion, is this idea of the paradigm shift, going from the immediate response to the longer term, more development-oriented lens through which we address these types of initiatives and these types of situations. So thank you very much for highlighting that. I'm going to pause it for a moment and then maybe pick it up a little bit again later, as this is something that has come up at different points throughout the course. I'm not seeing for the moment any raised hands or any questions in the chat box, but let me take this opportunity before I move into the second round of questions. So again, stress that you have the opportunity to share your reflections, your reactions, or questions if you have any, or requests for clarification, or if there's anything that you want to know more about. Feel free to either raise your hand using the reaction at the bottom of your Zoom screen, or type your question or comment or reaction in the chat box, and we will pick it up from there if you're not in a position to be able to open your microphone. I'm going to come back to you, Yousra, instead, as we move into the next round of questions. And I would like to know from you, in your view, in the experience that you've had working on this topic so far, what would you think are the key policy or regulatory changes that would be the most needed to create a more enabling environment to achieve the financial and economic inclusion of forcibly displaced persons and refugees in particular? So thank you once again, and over to you.
Thanks. Very important question, and actually quite foundational. Because without a regulatory environment, and if the regulatory environment is hostile to access to finance for refugees, there is no access to finance. And we have seen, and Micol can also talk about this, that even sometimes when the regulatory environment is not prohibitive, but it's not very clear that it is, yes, you can serve refugees, financial service providers, banks, insurance companies, they are very reluctant to do so. So it is extremely important. So the creation of this enabling and conducive environment is extremely important as a first step. And actually it requires changes, of course, at the national level. So policy, regulatory adaptation, policy changes, but also at the institutional level in terms of mindset and in terms of how do you accept and how do you understand this segment of refugees as a financial service provider? So the very first issue when a refugee goes to a bank, let's say, to open an account, the very first question is, do you have an ID and where do you live? And do you have something, a proof of residence, so that we can open an account? Because this is what they ask to the national, to the host community. So this is the basic, what we say, what we mention in the financial world as KYC requirement, know your customer. And by law, they are obliged to the financial sector within all of these international regulations. They need really to know who this person is, where does that person live. So this is the very first barrier. And because most of the time, the refugees, either they don't have at all an identity card or something to prove their identity, or whatever they have is not accepted and not recognized by the banks. So the very first kind of big change in the regulatory environment is to recognize those alternative forms of IDs, so that the regulator, the central bank, can say, okay, banks, MFIs, payment services, you can recognize the refugee card, the UNHCR card as an identity card. So actually also the fact that the regulation is not as clear as I was mentioning, this kind of implies or give a negative signal to the banks and to the financial service providers that this population might be risky, it's not clear, so okay, let's stay away from them. So this also can give a signal, a negative signal to them. So potentially allowing very clearly for alternative KYC or for simplified KYC, so know your customer, can also be something that would help the banks, for example, or the financial service providers, to get to know better this segment with less risky products. So the less risky product is a savings account, because actually I am entrusting you, bank, with my money, so you cannot fear anything from my side. So if the KYC and if the requirements to open a savings account can be adapted, then we can have this initial and first step into financial inclusion and this first step into creating a financial history between the refugee and the financial institution. Another aspect as well that can be looked at is how to incentivize the private sector, including banks and financial service providers, to engage within this segment with incentives until a business case is proven. Because the whole idea for us, for the ILO, but also together with UNHCR, is to convince the banks that actually this is a market. This is a segment that you can, of course, that you need to clarify and to segment well, so that you can treat them and serve them as you are serving your other clientele and your hosts. So part of the work that we do ourselves within the ILO to incentivize and to support and to help financial service providers to understand this population, these FDPs, is to provide them with capacity building and technical assistance so that they understand better this segment and they create products that serve this segment. At the same time, what Micol was saying, also the work on financial education and on capacitating the refugees themselves to understand this new financial system in which they have embarked that they didn't know before, to also understand, in case they have not had a financial education before, what does it mean to interact with a financial service provider? What does it entail for you to have a loan? Both from your side, not to put your side in yourself in an over-indebtedness situation, for example, but also on the side of the financial service provider. Why is it important that you don't treat it as a cash assistance? So these kind of capacity building from the supply and the demand side has also proven to be very interesting. Another incentive we have been also exploring is to link our partners, the financial service providers that we have capacitated with whom we are working, to to get access to concessional funds, to more liquidity, so that they can also service and serve and on lend out of those funds to refugees and host communities. And of course, when we talk about regulation and being the ILO, one of the things that is extremely important is the right to work. And if you have the right to work, then you have the right to, of course, create your own enterprises, but not only, but also to access wage employment, salaried employment, and generate an income. So this is an extremely important part. So you, as Micol was saying, when you generate an income, then it makes sense that you have payment services, that you have a banking account, that you have a savings account, that these services, these financial services and products, they make sense. That's all.
Thank you, Yousra. I was just seeing that we have a raised hand already in the chat. So over to you, Anna, for your question before I pass to the following question to Micol.
Thank you very much. So my question is to Yousra, because just now she mentioned that basically, if a refugee has a right to work, then a refugee has a right to create own enterprise. But recently, I was really surprised that, for example, in Switzerland, so I will speak, I will probably not speak only on one canton, but because we already had the exchange with several stakeholders, that actually they are not supporting, so the authorities are not supporting if refugees register own enterprise, like some self-employment. And I tried to get clarification from authorities why. And actually the answer was because we are not sure that a refugee can on his or her own maintain financial accounts. So, and then my actually question arises, okay, if they are not sure, why they do not raise this question to, so to say, higher level, and not to start funding some, I don't know, capacity building for refugees to maintain those financial accounts? Because for me, you all know that refugees, for example, experience like huge difficulty, for example, to get into the company, when they are sending CVs. And then, like, one of the ways, what I have seen, like on my research and also on my own experiences, that one of the way is to create your own enterprise and to start proposing your services. But then it appeared that there is an obstacle also here. So I don't know in like the situation in other countries, for example, but this is just the case that I wanted to share. So, and this is like, appeared to be quite spread. So in Switzerland, across different cantons. And the second issue that I wanted to share maybe with both of speakers, that like when I worked, for example, in Ukraine with livelihoods program, I observed that the demand for the like for grants to start businesses is much higher than actually the availability of them on the market. And then, like, I started to think, okay, what can we do? And I got the idea that maybe to create a kind of a revolving fund so that those refugees who, like in case of Ukraine, these were internally displaced people, these were not refugees, But once they become, so to say, self-sustainable, they can slowly give back those money, and then there are money in fund to provide also money for starting of the business to other refugees. But when I consulted with different stakeholders, including UN, so they told me that this is a very complicated idea and very complicated management of this. And I would like to ask you if something like this is realized in any of the country, and if you agree with me that actually the demand for grants is much higher than actually the current availability on the market. Thank you very much.
Thank you, Anna, for the two questions. So I'll have a stab at answering, and then Micol, I'm sure that you would have things also from the Ukrainian specific angle. So the right to create an enterprise and the fact that the Swiss authorities are not allowing it under the impression that refugees, they are unable to maintain financial accounts. I totally agree with you that I find it a bit, it's a pity that in response to this perhaps existing issue within the knowledge of the refugees, that they don't support, they don't say, okay, let us help you, show you how do you maintain financial accounts, how do you perhaps even more than that, how do you manage a business, how do you formalize a business, what are the rules and the regulations in Switzerland. And I know that they can be quite cumbersome, but there is, I mean, if you share the knowledge, people would learn, and they would try to also comply and open their enterprises. And this is some of the things that we also provide at the ILO. We have not worked specifically with the refugees in Switzerland, but in many other countries, and I'm sure you have already discussed about the entrepreneurship training that the ILO has, that also have all of this part on calculating your costs, on maintaining your books. And so it is really part of a bigger entrepreneurship management training. Under financial education, we also touch on that as well. So we have these tools. So we would have been more than happy to support in Switzerland. And actually, we have even trainers that are happy to provide those types of trainings. So I totally agree with you on your evaluation of this. On the revolving fund, the idea of having a fund that revolves and that gives the first kind of round of loans and helps first number of refugees to realize their opportunities, their economic opportunities, they reimburse, and then you do it again. So it revolves. It's a great idea. The problem or the issue is that it is a financial product. A revolving fund is a financial product, and in many countries, but also in the financial world, we are more advised to have those revolving funds managed and sustained and managed by professional financial institutions. So because the example that we have seen, the different examples that we have seen across the years where revolving funds were extremely popular, that have been run by NGOs, is that it's a profession. So really lending and making sure that the money gets back, calculating the right interest rate, following up on clients, evaluating the risk, segmenting and understanding the risk, and saying, okay, this type of client would perhaps need 100, while the other perhaps only 50. So all of this is quite professional. And the risk that we have seen is that in 1 or 2 rounds, the revolving fund is depleted. When it is managed by financial service providers, by professional financial institutions, then at least it is so all of these revolving of providing, of giving loans, getting back the loans, getting the reimbursement, it is something that is the bread and butter of what they do daily. So it is more, how to say, easily implemented. And so what we suggest is that if you have a particular interest for an area, or perhaps not specific people, but for a general segment, then you can say, okay, with a financial institution, I give you my revolving fund to manage. And this is what I potentially would like to achieve with this. But of course, you need to let the, how to say, not to guide them and to say, okay, I have trained Miki and Micol and Yousra, and I would like you to give loan to Miki, Micol and Yousra, even though their enterprises are not up to the standard. So just to give to the financial institution, to let them do what they know best on how to evaluate the risk and to segment. I hope I answered your questions.
Thank you, Yousra. I see nodding on the part of Anna. So thank you so much for, on the one hand, expanding a bit the conversation, but also bringing it to a very concrete example and a very concrete level. As there aren't any other questions at this moment, let me move then back to Micol and perhaps pick up a little bit about on the point that you mentioned earlier about the mindset shift that needs to happen in order for financial inclusion to be meaningful and to be effective. And then my question to you would be about what you think are the main ingredients, the ones that we cannot dispense with for an effective collaboration between humanitarian actors, as you mentioned, development agencies that have more of this longer term, let's say, perspective or engagement, and then the financial sector and financial actors when it comes to turning financial inclusion into reality for displaced populations. Thank you.
Very good. Yeah. And I think probably with this answer, I can also somehow address the question of Anna, the second question about the revolving loans. And so to the question, Anna, that you were posing, if we also observe that the demand for grants is higher than the supply, absolutely yes. And this is across the board, definitely, especially in emergency situation like Ukraine, but it's really all over. There is not enough assistance to meet such demand. And so what is then the role of both the humanitarian organization and development actors and the private sector? So I have the same vision of Yousra when it comes to revolving loans, just to close the loop on that, and then see then what else can we do, because actually UNHCR has a track history of structuring revolving loans. We have been doing that for a few years in a number of countries, and they get depleted pretty fast indeed, mostly because we don't have capacity for monitoring, and so it becomes essentially a grant. And also because often it happens what Yousra was saying, we try to advise the financial institution that usually often happens to be NGOs, not really specialized in microfinance, to provide loans to people that probably are not the right recipients of microfinance loans. They should be more on the cash assistance side. And so then they have issues with repaying the loans, and the consequence is not only that the funds get depleted soon, but they also start to have a bad credit history that is against also our protection mandate. So we want to find a solution where revolving loans sometimes might help in some cases, but we rather prefer to work with, whenever possible, with the specialized financial service providers and with international financial institutions to close this gap. And now to the question of Miki then. What is this kind of ecosystem where everyone should be playing a role, from humanitarian agencies like UNHCR and NGOs, partners, and other UN agencies that are on the ground? We have a specific role there, which is also quite of importance when it comes to financial inclusion, because we have a local presence. We collect a lot of data on demographic, on the socioeconomic profiling of refugees, and baseline data is key for any financial service provider to want to understand the market. So at least you can have a kind of a picture, a snapshot of what is the displaced population in a given context that might be a target for a financial institution. And then we do provide logistic support to settlements, and we have agreements to share data. And so, and we have, of course, a very strong relationship with governments whenever possible. So we work very closely with central bank regulators to accept, for example, the refugee ID as a means to open financial accounts. But then our role when it comes to financial inclusion should really stop there. So we should not replace the market. We should not be a provider. We should rather be a connector with those specialized institutions that, as Yousra was saying, know how to do their job. And so these are international financial institutions. We work very closely with a number of them, from the IFC, the African Development Bank, FSD. We have a long list of partners, which is expanding because now there is a number of international financial institutions particularly get interested into financial inclusion as an enabler to economic opportunities. And then we have a lot of partnership with financial service providers. So as a concrete example that might be of interest, just really to summarize what the potential good practice might be, is a program that we established 5 years ago in Uganda as a partnership between UNHCR, SIDA, which is the Swedish Development Agency, and an impact investor, which is Grameen Credit Agricole Foundation. So we have set up the first blended finance program in a refugee setting, targeting specifically refugees and host communities run enterprises. And so the program encompasses a few components where every stakeholder is bringing their own added value. So SIDA provided grants to cover some of the operational costs for selected financial institutions in Uganda to open point of services in settlement. That comes with a cost, and part of that cost, the initial cost, was offset by the Swedish Development Agency. SIDA also provided a partial guarantee to Grameen. Grameen was the very first time that an impact investor was putting that funding into a refugee context, and being the first time, SIDA proposed to cover part of their potential portfolio losses through a guarantee, which then they subscribed with SIDA. And because of this guarantee, then Grameen could also offer good market rates in terms of that funding to selected financial service providers in Uganda, and also managing the technical assistance. UNHCR collected key demographic data and also helped the financial institution to validate the refugee ID so that they could get access to credit. So it was a tripartite agreement between a humanitarian agency, development agency, and the private sector. And the program went very well. It's been now 5 years. Over 130,000 people between refugees and hosts for the first time got access to loans for enterprise and financial education. And the nicest part is that the portfolio quality was excellent for refugees, even better than the host communities, and the guarantee has been untouched, meaning that SIDA could use those funding now to promote other activities in the refugee space. And because the model proved to work, Grameen is no longer asking for a guarantee to continue to operate in Uganda. They've been reinvesting in the same institution. And new funders such as Proparco joined to cover part of the technical assistance associated costs, and now the program is scaling, and that has become quite of a model in the area, and other development financial institutions are looking at it to replicate in other countries. So to me, this is a sort of successful partnership that really didn't cost much, apart from the technical assistance provided by SIDA, and it was a great investment for Grameen, and is now bringing the attention to from other DFIs and other FSPs learning from the experience in Uganda.
Fantastic. And thank you, Micol, for sharing this very concrete experience and this success story, which I think is going to be quite inspiring for participants as well, especially for the, as you mentioned, the partnership aspect that was built into it. So thank you for bringing that up. We have again one raised hand. So Anna, back to you.
Yes, just a very quick question to Micol. So about the replication of this program in other countries, like has UNHCR already, because you estimate that this program is quite successful, so do you see any potential and also any interest of SIDA and other involved stakeholders to replicate this program in other countries? Thank you.
Yes, definitely. So with the African Development Bank, we are in active conversation about possibly replicating in other countries in Africa. There are also different models, to work. For example, IFC is another big partner of us, and has a strong interest also for the Ukrainian situation. So instead of doing blended finance, they, for example, decided to establish a loan portfolio guarantee to Santander Poland, targeting Ukrainian businesses in the country. And I know that they're also looking in other countries like Moldova to see whether it's possible for them. So in that case, it will be more of a de-risking facility. But just to mention that IFC should be an important player in this area, and I know that their interest is growing, and we've also seen other development financial institutions that are looking into this. So the hope is that we soon are going to see more of this type of partnerships happening, especially in fragile contexts, which is where they are the most needed and where the risk mechanisms are really a catalytic for private sector investments.
Thank you very much. These are very positive news.
Thank you both. So thank you, Anna, for raising the point, and thank you, Micol, for your answer. Let me once again encourage all participants, if you have any reactions, questions, additions, or if you want to take the conversation in a slightly different direction than the one that I have indicated with my question, please feel free to do that. You can use the chat box, you can raise your hand, we can give you the floor directly if you are in the position to use your microphone. But if nothing is moving for the moment, then let me take advantage, because I'm also conscious of the time. I do have one last question addressed, one for Yousra once again, and one for Micol. Points that have in part already been raised, but maybe we can hear a little bit more in detail and more in the specifics. So Yousra, you mentioned earlier working on capacity building on both on the supply and on the demand side. So I'd be interested in hearing more about the role that financial service providers, you mentioned microfinance institutions, for example, the role that they can play in expanding access to finance for forcibly displaced persons, but also how the ILO is working to build that capacity. You mentioned that capacity building is one of the big pillars of the interventions that the ILO is rolling out. So if we could hear a little bit more about the model. Thank you.
Thanks, Miki, for the question. So actually, when I was mentioning, of course, we work with the financial sector, the provider of financial services in large, but mostly, and when we work with refugees, for now, most of our partners are providers of loan, savings, and payment services. Those are either banks, microfinance institutions. So if they are banks, it means that they are regulated by the central bank and they need to obey by all kind of prudential rules. Microfinance institutions that can be either non-bank financial institution, that can be under, of course, a form of a professional NGO, that have different forms that can or cannot be also regulated by the central bank. So it really depends. And of course, there are the financial cooperatives as well, with whom we are working. And again, under different legislations, they are either regulated or by the central bank or not. So your question, I mean, I hear is mostly on the microfinance institution. And what is interesting for those this type of institutional setup of financial service providers is that they are really at the intersection of innovation and inclusion. They are really in the middle. They are quite agile, flexible, and they have a little bit more leeway than banks to test things. And so they are, we found them uniquely also positioned to kind of bridge the gap and to provide those financial services to this quite particular population that are the FDPs. Why so? Why are they able to be to reach those FDPs? So we found, so we are working with around 12 financial service providers, but both banks and the microfinance institutions in around seven countries. So we have this experience of also kind of comparing the different institutional setup. And what we have seen with the MFIs, the microfinance institutions, that they have this last mile access. So they have it geographically because they can just decide, the board can just decide, okay, let us open not even a branch, how do they call it? Like an antenna, like a very small office, a presence in a refugee camp to be closer to the FDPs. This is unfortunately not as easy for banks because for any branch, they need to ask for the agreement from the central bank, and there are all kind of rules and things to follow. What is also interesting in terms of this access and this last mile access, not only the geographical flexibility, but also in terms of innovation, where they can design products and services and tailor them, leveraging the informal financial mechanisms that are out there. So the VSLAs, for example, we have seen many of our microfinance institutions that are partnering with us in thinking a new product for the refugees, saying, but all of these refugees in BDBD settlements in Uganda, they are by default, they are in a village savings group that has been there for the last 2-3 years, which means that we know what is their risk profile because we know what do they save every round, how much do they take in terms of loans from this informal group, are they good repayers or not? So they are able to leverage that as well and to use these informal schemes, financial schemes, and to integrate them into the design of their own products. They can also tailor products for very small micro individual enterprises that are very common in the settlements and in the refugee camps and among host communities as well, because also what we have seen is that refugees and host communities, most of the time, they have a very, very similar profile. And those products, they are also answering specific constraints of FDPs and host communities extremely vulnerable in those areas. For example, group loans that are the bread and butter of microfinance institutions. They can also use, for example, in evaluating the risks, other tools that banks don't choose. For instance, they can ask for the financial transactions through a digital wallet. And this would also give them an idea about what are the type of financial transaction that this person that is coming for a loan is having. So they can really adapt their risk management tools and the type of data that they are using to evaluate the risk profile. Another option or another aspect as well that makes them very, their services and their setup, institutional setup is easily adaptable to FDPs, is that they, not all of the time, but most of the time, and they are also, they have the capacity, or they create the capacity within the institution to be the providers of non-financial services themselves to the people that they will serve with financial services. Financial education is a very powerful example. And we have seen that providing financial education to potential clients, refugees and hosts, by the financial institution itself will definitely improve the repayment rate. Why? Because one, this would enable the loan officer who is providing the financial education training to acquaint him or herself with the enterprise, with the character and the personality of the entrepreneur. So there is a lot of information that you cannot get from a half an hour discussion that you will get through 3 days training by all means. This is on one side. So the evaluation of the risk profile is more accurate, which would lead the loan officer to say, okay, perhaps let me start with half what they are asking just to test and to see, because my evaluation of the enterprise is that the cycle, the productivity is not as high, whatever. So they are able to evaluate better the risk. But also on the side of the potential client, host or FDP, is that there is a very strong trust that is created between the client and the financial institution, where they see that it's not only a business of providing money and getting money back. It is also they are into a social mission of helping this person improve, get access to economic opportunities and grow and so on and so forth. So this also would lead to a certain relationship that is not an impersonal one, but that would lead the entrepreneur also to be more stringent in the reimbursement. And so how can the ILO support in all of this? So we have a capacity building and technical assistance program that supports the financial service providers, MFIs or banks, and take them by the hand, really to start by demystifying the refugees and who is this population, what they are. Are they really these people that I just turn my back and they are going to take a loan and flee? Are they a population that is really, really like the host communities, and as Micol said, have a repayment capacity that is at least the same as the host, if not even better? So we have a training that is called Making Finance Work for Refugees and Host Communities. That is a training for financial service providers exactly to do that, to demystify, but not only that, but also to take them through the different parts of a successful management of a financial institution looked at through the lens of serving this population, this particular segment. So how you can change the mindset of your staff, because some of the things that we have seen is that the staff are the first resistance barrier within the financial institution, because again, they have this mindset about refugees. How you can evaluate the risk, how you understand and you segment specifically. So not all refugees, like not all nationals are good potential clients. So how you choose and how you segment, neither to put them into risk of being over indebted, nor to get yourself as a financial institution into an issue as well. So this is kind of in a nutshell the training. And then we continue with technical assistance so that they can apply on their own situation within their own refugee segment in their own area where they are active, where they can apply the knowledge that they have gotten through the training. And the idea is that we train them through market assessment. We go with them to those particular areas to make surveys and to have interviews, and to, after digest this information with the final aim, with our support, to come up with a product or a series of products that are answering the specific need of this specific segment in the specific area where the financial institution wants to be active. And at the very, very end of this whole process is the pilot testing of the product. Once they conceive and they think about the product, then, okay, let's test it on a small segment. Let's see how it is received, what are their comments, how we can improve it, and then we improve and we roll out. So this is the kind of capacity building technical assistance that that we support the financial service providers with. And then there is the whole also kind of set of other capacity building and training that are provided to the refugees themselves. And there, so I mean, we have discussed about it many times, the financial education, where we have this very specific training adapted to the situation of refugees. It's called Financial Education for Refugees and Host Communities. And it is also complemented by entrepreneurship training on the different life cycle of the enterprise. It can be if you are starting and wanting to create an enterprise, then it is there's like start your business. There is another training to improve or to grow, and so on and so forth. Linked to this as well, and with this entrepreneurial path and linking entrepreneurship to access to finance, in some of the setup and of the countries, we have created business plan competitions to also support the entrepreneurs to have an objective, so that they can pitch their ideas with the objective of getting access to either additional support. It can be a very small grant, but all of it is also linked to financial inclusion and to financial service providers. So this is in a nutshell the intervention model of the ILO. That is, of course, and that this was the initial question from Miki, is the policy and the regulatory environment, where also we work a lot at the policy level with the financial regulators, central banks, ministries of finance, but also with the help of constituents, with the unions and the employers' organizations, in order to advocate for a better inclusion of financial of FDPs into the financial sector. That's it.
Thank you, Yousra. And I'm going to take advantage of this last point that you made about advocating for better or more inclusive policies for access to finance, to ask then to launch, let's say, my last question to Micol as well. If you can tell us a little bit more also about how UNHCR works with specific counterparts, could be governments, could be financial regulators, and so on, to advocate for these sort of inclusive financial policies for refugees, but also, as we have heard come up also in the description that Yousra has shared, to put up the necessary safeguards to ensure that the risks are minimized, and to ensure that financial inclusion efforts do not inadvertently have the opposite effect of exposing displaced persons to new risks or new types of vulnerabilities. So really ensuring that no harm is being done. And thank you, Micol.
Very good. Yes, I see that Anna, she has a hand raised. I don't know if it's from now or from before, but I guess we can probably, Anna, answer your question at the end of this.
In a little while. Thank you.
Okay, very good. So, yes, so indeed, UNHCR, as I mentioned, has a strong relationship with government, central bank regulators, and advocacy is a big component of our work to ensure that displaced people have the right to access financial services. So a lot of work happens on the ground by having meetings with these constituents, and in many countries we succeeded to change the legislation so that refugees, asylum seekers had their rights to jobs, freedom of movement, and access to financial services, to SIM cards recognized. Some positive examples come from Uganda, from Zambia, South America. So we have a lot of positive regulatory frameworks that have been developed in the past few years at this regards. We also work closely with the Financial Action Task Force, which is that international regulatory body that set the standards for financial institutions to abide to when it comes to anti-money laundering and counterterrorism financing, and we have provided specific recommendations for refugees, such as open tier KYC, accounts, especially for those refugees that come from countries that are in the sort of blacklist when it comes to AML and counter-terrorism financing. And so we've been seeing progress in some countries with the ability for many refugees before excluded to have basic deposit accounts open that before they couldn't. So there is definitely been progress also in terms of international standards, not just country by country. At this regard, we also work closely with the Alliance for Financial Inclusion, which is a sort of a forum of debate with central banks, especially in the developing countries, to strengthen their national financial inclusion strategies and policies to be more inclusive for the rights of displaced persons, of migrants. And also there we have mapped out a number of good practices that have also been documented on the Alliance for Financial Inclusion website. For those of you who have an interest to see the latest, there are a number of published policy recommendation. When it comes indeed to the protection component, credit comes always with the risk of the not capacity to repay loans or of indebtedness. So there, the financial sector has their own standards. UNHCR is not pushing to create a specific standards when it comes to consumer protection for the refugees, but we do have stringent policies when it comes to data protection of the refugees. And so whenever we share, for example, data that are sensitive to financial institution, we have very clear agreement about what can and what cannot be shared. I also think when it comes to protection issues, again, financial education is a key component, but I would also say it's also important that humanitarian agencies or others do not distort the market, because that also, when sometimes, trying to do good for people that are excluded, and it happens a lot of countries, refugees are excluded from a financial sector, to kind of come in and play the role of the market, even when done in good faith, for example, by trying to subsidize the interest rate, because saying it's too high for a refugee to repay that rate, and so maybe we could artificially lower the interest rate charged by a bank to a refugee so the refugees can afford it. Maybe we might think that we're doing it a favor to refugees, but actually it can create an issue of over-indebtedness, because you artificially create for a short term something that doesn't exist in the market. If a market says that the interest rate is 11% and you artificially lower to 2% just for that segment of the population until subsidies last, then when subsidies are no longer there, then people that probably have been taking more loans, they easily can get over-indebted or having, too many outstanding loans to repay, and then they cannot really afford to repay those rates, and also create issues within the market, also might create issues with the host community, but also could also disrupt the market dynamics, where, FSPs some are going to be crowded out, even in fragile context, because there is someone that gets subsidy. So I just want to stress that whenever we come up with the blended finance program, we have to be very cognizant of not coming with a short-term solution that, even if might seem like kind of doing good, might actually eventually harm the relationship with the host community, or even harm the capacity of repaying. The same things comes when we structure guarantees. Guarantees might be interesting in some context, in other that just might be used from a financial institution in order to rapidly scale without doing the right risk assessment, because then there is a backup, that is the guarantee of selecting properly refugees that are capable of affording a loan. And then what does it happen if you give a loan to someone that is not capable to repay? Well, the person is not going to be repaying the loan. The bank is going to be safe because they have a guarantee. But then the credit history of the person is going to be affected. And then who's going to be lending to that person? So it's just important when you think about protection risk, also about what is the role of DFIs, of humanitarian organization and such.
Thank you, Micol. Thank you very much. In the interest of time, I see we have one question in the chat box, but I know that Hannah has been waiting very patiently with her hand raised. So over to you, Anna, for your questions before we close, and then I'm going to maybe highlight the question from the chat.
Yes, thank you, Miki. And actually, now after the speech of Micol, my question will be shorter because she partially covered it already when saying about all this subsidized loan. Because my question is actually that loans in like developing countries and emerging economies are quite expensive, and then I mean expensive for all these vulnerable local people, and then they should be all the time subsidized, or how to make the system work so that they are affordable and they are interesting for all this vulnerable population. I'm asking also this question because actually I worked with so how to say, with starting the loan system for the green credits, for example, in Ukraine, and it was a very long way. And actually, I would say to involve the private banks into this, it was like for a long time very difficult. And I even cannot say that now it is like, so to say, working well. And just because of the cost of these loans. And then the second comment also about the IFC, for example, activities, they really do a lot of impactful projects, but again, it costs a lot to start this project, like, for example, for the donors. Because like I was supervising the project of the IFC to start the loans for residential energy efficiency, so that the associations of homeowners can take the loans in banks. And basically approximately for 6 years it was not still possible to give these loans. And this project just demanded, so to say, financing from the donors. So in this particular case it was Switzerland in Ukraine, until actually the loan started. But IFC was totally correct, and for example, like then with the result of this project I'm very much satisfied, because like they were all the time saying that once the loans start, then the dynamics will be like that. And actually it became like that. But I mean that during all this period this is quite costly. And then based on this, like my question on the practices, as I understood, which are already existing in several countries for the loans for refugees, what dynamics do you see, and how to deal with all this compensation of the different interest rates? Thank you.
So I don't know, Micol, if you want to react first, and then if Yousra has something that she also wants to add, and then we can maybe just speak very quickly the question from, or perhaps before you react, let me go to the question in the chat. There was a question from Hanan about how other marginalized groups, such as persons with disabilities and older persons, are also included or considered under these initiatives. And I see, Yousra, that you've already replied in writing a little bit about this, indeed, this additional layer of marginalization that can come with living with a disability or with age. And how in the specific area of financial inclusion they are indeed served under the broader existing categories, and the support comes from the other activities and interventions that are supported by the ILO and by UNHCR, as we have seen in the session that was specifically dedicated to this. There is one additional comment, I would say, rather than a question, in the chat from Hassan, saying, in our operation, both refugees and members of the host community access financial services through Incomoco, a Sharia-compliant financial service provider. The repayment rate currently stands at an impressive 98%, demonstrating strong credit discipline among clients. However, demand for financial services remains significantly high, highlighting the need for increased financial service coverage, which is something that has also already emerged, and for additional providers to meet the growing needs of the population. So thank you for sharing that, Hassan, and thank you also, Hanan, for your point about people with disabilities and people who are older. And I don't know if Micol or Yousra, you have any reactions to the points raised again by Hannah, or to the points raised in the chat before we close. Thank you.
Sure, I will be very brief for the sake of time, but to Anna. So then what can we do? We try to push for sort of what we say smart subsidies. So subsidies are always needed in this area for sure, but then is you have the capacity to select what type of subsidies to make loans accessible and affordable to the refugees. And so what, for example, the example that I was bringing about what we did in Uganda, the subsidy was to cover some of the cost, the operational cost of the financial institution to enter in the settlement, so that that cost is not passed on to the client, or we subsidize the financial education or business training so that that cost doesn't get into the interest rate that the client is paying. So there are ways to lower the interest rate without directly subsidizing an interest rate, unless it's for a specific program, for a specific target group in a given region where it really there is a need to also consider subsidies in terms of really to lower the interest rate. What we instead try to promote is the market segmentation, because not everyone should be a client of a microfinance institution. The important thing of segmentation is to understand which market segment is viable and capable of affording the interest rate in a given context, and then the one that are not yet there, we try to promote the so-called graduation approach, which is kind of the model that BRAC has conceived, which has become now very popular, where you essentially work with the Informal Savings and Loan Association. You provide inputs and assets to start a business, and so through training and through cash injection whenever is possible, you also help those people to be better off, and eventually some of them might also be able to access bigger loans from financial service providers. And back to what the colleague was talking about in Komoko. In Komoko is a very nice example of an incubator. In Komoko works very well to provide smaller loans to those entrepreneurs that often they cannot also afford a higher interest rate loan in certain markets, but they are very important then as a first line to empower them to access credit, to get a business education, and then some of them may also be able to access loans from other financial service provider offering other type of products, even if at a higher rate. So the experience is so far that rather than directly subsidizing interest rate, we should come up with subsidies that make sense, that can also then lower the interest rates, but really segmenting the market rather than treating all refugees like unable to repay, or they're too poor, or not everyone is entrepreneur, not everyone should have access to loans. And then finally, to answer Hanan, so the microfinance sector has a lot of experience in terms of targeting people with disabilities. I don't know much about older person. At UNHCR specifically, I know that definitely several of our financial service provider partners have refugees with disability among their target group. I don't know if there are honestly specific products designed to that, or it's more about the inclusiveness. That's I don't think we have been tracking in-house, but there has been quite a bit of work done actually on microfinance and people with disability, but I don't think internally, again, we've been tracking it. Yousra, I don't know if you have anything to complement.
No, I mean, I have mentioned it to Hanan on the chat, but that's true that some of the socially oriented financial service providers are very sensitive to this disability, but also to the older people issues, but I don't think for neither they have created specific products. So they are rather under the umbrella. They are not excluded, but they are not looked at specifically within their own issues and constraints. And to also on the comment from Hassan in Kenya and in Komoko, that's true that and it is definitely, I mean, one of the good how to say, the fact that you are able also, I mean, Inkomoko was able to show and to share the level of repayment that is, as you say, is definitely impressive for both refugees and host communities. It is also a way to potentially, hopefully, crowd in additional and more financial service providers. It is so Inkomoko is very particular in the way that, as Micol was mentioning, it's kind of an incubator because they cannot, and as you said, they cannot serve all of the demand that is there because they have very particular conditions. So I've been a few weeks ago in Kakuma and one talking also to clients of different financial service providers, and what they were saying is that that's true that Inkomoko is providing loans that are cheaper somehow, but it is not very easy to get them. So the from a refugee perspective, the idea or the interest of having the value of having a loan is not only linked to the interest rate. It can also be linked to whether it is available whenever the refugee or the host person is needing it. So it's definitely, I mean, just to also go on your on the way that you are saying, the refugees are repaying if well segmented and well targeted. They pay as well as the host communities, but also we definitely need to find ways to crowd in additional financial service providers, more funders, more capacity builders, more of everything, because the market is there, the needs are there. And now in a situation where the assistance and the grants and all of the donor money is, as you know, is being reduced and being, there is less and less of that. Definitely the idea of moving and to looking at the private sector and how we also can concentrate the little money of assistance that we have on the ones that really need it, and look at how to graduate and to support the ones that are more entrepreneurial, more self-reliant, towards more entrepreneurial paths and more self-reliance paths.
Thank you, Yousra, and being mindful of the time. Let me also thank Micol for taking the time to sit with us today to guide us through these very pressing, very timely, but also very interesting topic of ensuring financial inclusion and access to finance for displaced populations. I am aware that we have reached the end of the time that we had set aside for our session today. So please feel free to leave the meeting while I take some time to run through a couple of very quick announcements. But before I do, once again, very big thanks. And I think the rest of the team and the rest of the participants also share my gratitude to you for participating in this session.
Thank you very much.
Of course, it's been a pleasure. So very quick,
everyone.
bye, Yousra, thank you. So very quickly, because as I mentioned at the beginning, this is a bit of a different week compared to the others in the course. Let me just take the opportunity to remind you that tomorrow at 2 p.m. we will have our spotlight session. It's going to start with a presentation by a former participant, Ibrahim Khalifa, who participated in the course last year and is now implicated in the rollout, in the development and the rollout of the Shirika plan for the inclusion of refugees in the labor market in Kenya. He will run us through a quick presentation of the plan tomorrow starting at 2 o'clock. And then after that, we're going to hear from you. And I have already confirmed two volunteer speakers for tomorrow. The first is Anna, the second is Jean-Bertrand. Jean-Bertrand has also been involved in the creation of a documentary film that we have linked on the eCampus. It's not very long, so I encourage you to take a look at it before the start of the session so that you can come prepared already with some reflections, some reactions, maybe some questions to help guide the discussion. The last session in the course is going to take place on the 24th of April, so Thursday at 2 o'clock as well. And it's going to be the presentation of the results of the group work. So the 3 groups should be ready to present on Thursday at 2 p.m. We have kindly asked that you submit a copy of your presentation on the eCampus before that, so ideally by tomorrow evening, so that we can already have access to a copy in case anything happens. We can keep a copy for our records. And let me also highlight that together with the last weekly section of the eCampus, we have already also opened up the section on the eCampus that is dedicated to the final assignment, where you will find the 5 questions, out of which you will have to pick 3 to reply in 500 words, more or less, for your final assignment, which is compulsory if you want to obtain the Certificate of Achievement, which is the only one eligible for the diploma for labor migration experts and practitioners. Please note that if you choose to not complete the final assignment, you will still be eligible for a certificate, but it will be a certificate of participation, which will not count for the diploma. So the choice is up to you. And if you would like to have more information on the diploma or more clarification on the certification requirements, please feel free to reach out to let us know. We're also going to take a little bit of time at the end of the last session to go through the certification criteria once again. If you have any additional questions, please, on anything related to the course material, the activities, the completion rates, and so on, please do let us know. And in the meantime, let me wish you a very nice evening, and I will see you again online tomorrow at 2 p.m. for the spotlight session. Thank you all, and see you tomorrow.
Thank you, Miki. Thank you, everyone. Goodbye.